All right, hold on, everyone. All right. Looks like I'm not streaming on Twitter for some reason. All right, doesn't matter. No one watches me on there anyway. Hey everyone. All right, welcome to the stream. Mark here. Let's get right into this because we have a lot to talk about. So if you're new to the stream, welcome. Let me explain to you how this works real quick. So the first thing I'm going to do is I'm going to talk about the economic calendar, so we're aware of what economic events are coming out this week and we can prepare. Second, okay. Second, I'm going to talk about this Bitcoin situation, right? We're going to talk about the analysis that I wrote on TradingView yesterday, and we're going to talk about what this area means, especially in terms of dollar cost averaging. And then we're going to get into trades, see if we could find some trades. And I think we'll be able to find something with this type of momentum going on here. All right, so with that, let's get started. Let me just pull up my special slide. Man, where is everyone today? Am I not even on YouTube? What's going on? It says I'm streaming on YouTube. All right, hold on. Let me just pull up my slide. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, what's going on here? It says I'm on YouTube, but I don't see anyone watching me. What's up with that? All right. I guess I'm going to have to stream to myself today. Is anyone there? Oh, there you are. UTXO. Oh, okay. Oh, you know what? It's telling me. All right. It's just telling me. I guess the numbers are not working right. All right. No problem. I'm glad someone's watching me. All right. So anyway, if you want to share what city or what country you're from as a fun fact, I'm streaming from the greater New York City area, also known as Northern New Jersey. And the weather's getting a little bit better here. All right. So first thing, let's run through the economic calendar. Man, we have a lot to talk about. So as far as the economic calendar goes, we have beginning tomorrow, Tuesday, we have President Lagarde from the ECB speaking. I believe that's tomorrow. That's not that big of a deal, but you want to just kind of keep an eye on it, especially since we have all kinds of drama in governments these days and central banks. Wednesday, we have the CPI report that comes out at 8:30 a.m. Eastern time. That number is just as important as non-farm payrolls, so you definitely want to be aware of it. It can move markets. That same day, we have the Bank of Canada interest rate announcement. Now, normally, that's not a big deal. But because Canada is in the spotlight these days, you might want to pay attention to that, or it may move Forex somewhat, because of all the drama that surrounds Canada that's been going on there. So keep an eye on that number. On Thursday, we have the PPI. Hey guys, all right, everyone's coming in. Savi, all right, Hussein, good to see you guys. Nugs, good to see you. Thanks for joining in. On Thursday, we have the PPI, which is not that important. It doesn't have to carry the same weight as the CPI. I believe that's an 8:30 number Eastern time. Keep in mind, the time has changed here. The springtime thing, the what do you call that? The daylight savings is in effect. So everything's shifted by like an hour. Maybe that's why you guys are kind of off, because we basically we're an hour ahead now, right? So my time is just after 3 o'clock Eastern time, where normally this would be 4 o'clock Eastern time. All right, so that shift just occurred yesterday. Maybe that's why there's some confusion. All right, so anyway, that was Thursday with the PPI, and then Friday we have the Michigan Consumer Sentiment Report. That's usually at 10 a.m. or 10:30 a.m. Eastern time. You want to just double check that number. Usually, the Michigan Consumer Sentiment number is not an important number. No one ever used to pay attention to that number, but in recent times, they make more of a big deal out of it. So it can move markets intraday. You just want to be aware of it. That's all. All right. Enough about that. Let's get into these charts, shall we? I'm going to make the charts bigger. By the way, I've been working on my new streaming software. I'm still using the old software here, but in a week or so, or maybe 2 weeks, I'm going to shift to the new software. And it's way better than this, okay? Like way better. I'm going to be able to do some really cool things that I cannot do right now. And I'm going to make some important changes. So the look of the stream will get better. All right. So that's definitely coming. Just wanted to mention that. All right. So let's talk about my Bitcoin analysis I shared on TradingView yesterday. In that analysis, I pointed out a couple of things, right? I pointed out the lower high, which was established on Monday. I remember having the conversation in here with Hussein. He explained that the Bitcoin strategic reserve nonsense led to this rally, which got rejected. By the time I was doing the stream, we were like rejected. And I said, that's pretty bearish. Okay, remember that? Well, look where we are now, back to the low. This is pretty significant over here. All right. So the 90 to 95K area is now a resistance, as you can see. In fact, you can just basically take this, which was a support, and it's now a resistance. So that we can use to gauge profit potential, especially for swing trades, if you're getting into swing trades. Now, I've been talking about the 78K test. Here we are. We're actually below 78K. What are we at right now? 77.6. Now, this is a break, but how much do we follow through? I mean, Bitcoin right now is minus 2,900 points, like 3,000 points. The NASDAQ, the Qs are minus, like when I checked before, like 21 points in one day. That is ridiculous. Okay. These are ridiculous numbers. We have not seen these type of moves in like years. I don't remember seeing the NASDAQ minus 21 points in one day. That's a lot, and Bitcoin seems to be following along. So, like I've been saying in my reports, the levels are very important here. If this candle clears, I mean, we're not really cleared 78 yet. This thing in 2 minutes can be back above 78. So this doesn't really count yet as a break. We need to close dramatically below. Like we need to be at like 76.5 or something like that. And the candle needs to close. That I would consider a break. And in that scenario, that opens up 73K, right? 73K is a possibility, which was the previous all-time high. 73K, let's make that big on the chart here. Where is 73K? It's right around, yeah, this is 73K, right in there, this area right here. All right, I'll draw like a square there, okay? So this is like the 73K area right there. That's very within reason. And that is the next support, really, between 73 and 70 even. That is the next support if we clear this number. Now, again, I got criticized when we were pushing 95, 100K, and I was telling people, not a good place to buy, not a good place to invest. If you're going to do it small. I warned people, this is why, because this is now the buying opportunity. Let me ask you a question. Back in December, January, when we were pushing those highs and all that positive news came out, Michael Saylor is buying $10 trillion worth of Bitcoin today. Oh, remember all that nonsense? Not one person was saying, in the first quarter, Bitcoin is probably going to test 80K. Not one person was saying that. Now, could we forecast something like that? No. But the risk in those high 90s, but above 95, like above 99, the risk was high in this area. And I kept saying it. Even if you choose not to believe me, there was a wave 5 that was established in December. Whenever a wave 5 appears, that usually means that the next leg going forward is likely to be lower, not higher. If anything, we don't know how low, but it usually means higher highs are not, there's a much lower probability of higher highs. That's usually what that means. And this has been on my chart for months, right? 3 months. I put this on my chart like back in December or January when that was developed, and I talked about it. And I had the question mark up here because I don't know if this was the broader wave 5 of a broader 3. Now, so that's as much I'm going to say about the wave count. This can still be a wave 4, believe it or not, because we have to break 65K. If we break 65K, that changes everything, right? That will change, that will cancel out the impulse. So it doesn't necessarily mean we're in a bearish trend. What it means is, if anything, we're more likely in a range bound situation if we break 65 or touch 65K. because that's where wave one overlaps. And what that does is that cancels out the impulse. So how we use that information is if Bitcoin rallies off of 65K, expecting 100K or 150K or whatever becomes unreasonable at that point, right? Now, it could rally back to, 80 whatever. It could rally and stay inside the range. So basically, it says we're in a giant range if we go that far. If we don't go that far, if we don't overlap 65, then this wave four is still basically intact. And if this is intact, that means these are the bottom. This is the lows of wave four. This is where you want to be thinking of investing. Not 105, not 108. Now is the time. Now, Bitcoin looks ugly. I don't want to buy it now. I'm going to wait till it goes to 50K. Now is the time to be looking for investment prices. 78K. If we break that, 73K. These are places you can put the limit orders there now. The key, though, is the sizing. So let's talk about dollar cost averaging, because I mentioned that in the title, right? That's in today's title, DCA levels. So let's talk about that, because now is the time to be thinking about that. Notice I bring it up now while we're getting hammered in this thing, not when we're making new highs. So this is where it's most interesting. And by the way, this applies to all altcoins, because they typically, if you notice, they're all getting hammered as well, right? Are they not? Are any altcoins making all-time highs? No, they're not. So this is the time to be putting money out there. So here's a quick review of my dollar cost averaging idea. You want to have some sort of amount that you're looking to invest, right? It could be 10K, whatever. Hey, Slow, you pick some amount that you want to put into the market. Now, you're going to break that amount into smaller pieces. So let's just say it's 10K, just to keep things simple. You have to decide how you want to break it up into how your increments want to be. But to keep it simple, we're just going to talk about $10,000, and we're going to talk about $1,000 units. So you have $10,000 and you're going to invest $1,000 at a time, right? This is just an idea. You play with the numbers. Now, that means you have 10 purchases that you can make of $1,000. So now you can employ a time component where you pick like the 1st of the month or the 15th of the month, right? And that's when you make your $1,000 purchase, no matter where the price is. And that will allow you to average in at better prices beginning now. Hey, Milad. So again, if you choose the 1st of the month, for the next 10 months, you're going to be putting your $10,000 to work, $1,000 at a time. All right. DCA is also important to mention. Okay, so UTXO, yes, you bring up a point. Now, this is what I want to say about this, because I'm going to take the DCA idea a step further, which not too many people do. I just gave you the simple version, right? $10,000, $1,000 increments. 1st of the month, you buy your $1,000 and you don't do anything until the next month, right? That's the simplest way to go about it. And if Bitcoin starts pushing those lower prices, you're buying in at lower prices, right? And you're averaging in at a lower price instead of at 95K. Now, here is where you can take it a step further and refine it. And I've talked about this once before, but I'm going to bring it up here because now is a good time for this. You can break Bitcoin up, right, into zones, price zones. So let's zoom out a bit here. And we could say, okay, we have like a low risk area in this area. That was a consolidation for a long time, right? You could basically break it up into 3 zones. You have like a middle risk area, like in this area here, something like that. And then you have like a high risk area, which would be this high, the upper range that we've seen since the election, right? From the 70K breakout to 108, 109. That was the high risk area. So you can have these quadrants or these zones, not really a quadrant because there's only 3 of them, but you can have these zones, right? And the zones determine how you size into this. So now, for example, we'll look, instead of saying $1,000 on a $10,000 investment, which is 10%, right? 10%, and you have 10 purchases. Now we can break it into smaller percents. So, for example, in the high risk zone, you're only buying 0.5% or 1% of your amount. That equates to like $50 or $100. You're buying up in this area. You can do it once per month. You could do it twice per month, or you can do it per level. Like every time you touch 95, every time you touch 90, you're buying your 1%. When we get hammered like this, you don't feel any pain. Now, by the way, you really don't want to do this with leverage. It's better to do this with the spot when you're doing the dollar cost averaging, but you don't feel any pain. You watch. So maybe by now, let's say you started this back at the highs. Okay. Maybe by now, maybe you're $500 in out of $10,000. Maybe you're $1,000 in. Okay. With $10,000, you still have $9,000 to invest. You're feeling no pain. You're watching your $500 melt away a little bit. Like, all right, no big deal. You can handle it. While everyone else went all in at like 100 or 95, and now they're getting banged out. This is where the institutions, someone was selling up here. The rich people, whoever, the people in the know, they were selling while they got retail excited, and retail could not stop buying this. Well, Michael Saylor, he's our hero. He's buying trillions of dollars worth every single day, and he's going to make this thing go to 1 million, he said. Right. And here we are at 78K. So don't get me started on that. But that's the typical retail trader cycle. Now, so back to my idea here. In the mid zone, which is where we are now, 90K to basically 70K area, basically, right? Instead of 0.5% to 1%, you increase your increment size. Maybe now you're buying 2% or 3% of your total allocation, right? And you can do this again, 1st of the month, 15th of the month, or you could do it by level. Maybe like every 5,000 points, 85K, you bought 2%, 80K, you bought 3%. Okay, maybe 73K, you buy another 3%, right? But you want to keep it capped at some kind of percentage, right? But the thing is you're buying more. You're buying more at better prices. Now, Bitcoin may go lower. This is the low risk zone, right? And this is where you want to take your aggressive allocations, 5%, maybe 10% in this area. If we get there, okay, that would be below 70K. So if we're pushing into the 60s, that's really where you want to do that. So what does this do? This helps you allocate your money at better prices if those better prices present themselves, right? So you have a zone, and the zone basically guides you so that you're not sitting there buying too much too soon. I mean, by the time this thing, if it gets that far, because then again, it may not get there. It may stop around here. It may stop around 73K in turn, right? We may reverse hard somewhere between here and 65K over the next month. Who knows? Especially with the way all this news and drama, all this drama and nonsense, a lot of nonsense coming out. Okay, and people overreacting to complete nonsense. But do you understand my zone idea? So you have to have some of your own input here because, again, it's your money and you have to decide your allocation amounts. But all I'm saying is you're light up here, you're a little heavier here, but not much heavier, and then you're heavier here, right? And then in between these three zones, you should have your $10,000 allocated. How quickly, though, you can again do it by month, right? First day of the month, or if you want to be more aggressive, right? Like you can do it by level. And like, for example, now is a good level to be accumulating some, but you just stick to your plan. Okay, look, I'm buying in the mid zone here. I'm going to buy my 2%. I'm going to buy my 3%. And then maybe we get hammered and we go to 73K. Okay, I'll buy another 2 or 3%. Okay, something like that. So you're not going 2 or 3% is not really that much. And now you're accumulating some. And if it goes lower, again, you're not going to be feeling too much pain. You're still going to be within your $10,000 compared to these people that are putting in 10,000 at 90K. And now they're wondering what to do, right? They're at the mercy of the market. Does that make sense? So just to kind of recap the dollar cost averaging levels, we're at one right now. 73K is the next one. After that, you're looking at like high 60s. So we can say basically 68 to 65K. That's your next area. If that is cleared, you're looking at like 63 to 60K. Those are your levels. Now you say, well, what if we don't go that far? What do I do? Okay, good question. If Bitcoin bounces now over the next week, and we see, because this could still turn into a double bottom, believe it or not. We may see something like this tomorrow, like an inside bar, right? Or sometime this week. Maybe CPI, by the time CPI comes up, maybe we see something like that. That is a possibility. There's no way to know with any degree of certainty if this will happen. Okay, I don't know. But we are at a level where it's pretty possible, because we have a failed low. This may go slightly lower and then reverse, or this may reverse now, right? So if we have a situation like this where we get the green, the solid green, which is what we need, especially if it's an inside bar, or maybe we get a lower pin bar, right? We get a pin bar and the pin bar appears, in this area here, like this area, that would be the failed low. You get something like that, kind of like this pin bar, right? But this pin bar obviously wasn't the one. Okay, the pin bar that I'm referring to would kind of look something like this, where it makes that lower low and then reverses hard. That's the pin bar. In fact, I thought if you looked how the Nasdaq closed on Friday, that was a massive pin bar. I'm like, that's the bottom. That looks like the bottom. I thought today was going to be up 300 or 400 points. Okay, instead we're minus I think 8 something in the futures. 8 something. I think at one point it was almost minus 1,000 points. That's ridiculous. All right, we have not seen these numbers in a long time. I don't remember the Nasdaq being minus 1,000 points in at least a couple of years. I mean, I don't remember that number, because we've been so called into like thinking that everything is always okay all the time, all this positive news. The market never pulls back. In fact, well, we'll take a look at the Nasdaq chart in a moment, because it's very interesting, and it's relative to Bitcoin, because they're moving together. So like I said, what I just explained to you here, you can employ this on your altcoins, your Ethereum, your XRP, your popular altcoins. The meme coins, forget it. That's just complete garbage. Don't even waste your time, right? That's just complete gambling. I'm talking about the coins that have some sort of significance. You know the ones I'm talking about. All right, does that make sense? So that's the dollar cost averaging idea here. Any questions about that? So I gave you the levels, and I'm giving you a scenario. So we may see that bounce this week. I mean, right now there's no bounce. There's not. This is not a great looking candle. All we have is the level, right? And it's attempting to bounce. If I go to a smaller time frame, like a 4-hour chart, we're going to see something that looks a little bit better, right? The pin bar is trying to develop. See that? It's trying, but still, I mean, look, we've had some more promising. See the inside bar over here? See that? That should have been it. Okay, look at this. It's relative to the low. Look at this, right? Failed low, inside bar, and then it tried, and then it just, you see what happened there. So I'm looking for that to repeat again, right? We got the low. It's relative to this low right here. And this is basically, if we get the pattern again, it's the failed low. It just went a little bit lower. So you have a compound failed low on the 4-hour chart. If that scenario plays out, you have this low to this low, right? And then you have this low to this low. So it's a compound failed low if it plays out. Those are usually pretty good if it works, right? So the compound failed low, again, needs to show us an inside bar over here, okay, or something like that. And then we need to see this. If we don't see this, then the party hasn't started yet. So if you're getting now, so this is really where the realm of swing trades comes in, right? So let's put the DCA aside. I covered that. Let's talk about swing trades for a moment, because this is really what you want to see. If you're buying into this thing now, maybe on smaller time frames or whatever, and you don't get this, then I wouldn't be very optimistic about any kind of major bounce just yet. Although that's the scenario I'm looking for over the next few days. I think there's a high probability of it. But again, it may spike lower first. That's the tricky thing of this game. Just because a pattern appears doesn't guarantee anything, right? Because again, I would have argued that this is the bottom. I would have argued that this was the bottom, okay? And no bottom. We're basically pushing lower, and the Nasdaq's looking very ugly. Everything's looking very ugly. Usually when you have lower highs, which is what this was, a lower low is likely. So we have to be open to that as well. But I can tell you one thing. I would not be shorting at these prices. Okay. Now, day trades, that's one thing. You're going to day trade short, no problem. You want to take a small bite? There's been plenty of opportunities in these recent days for that. Okay, cool. But if you're thinking swing trade, or you're thinking, oh, Bitcoin's done, Bitcoin's going to zero from here, you're getting caught now with the wrong idea, because the probability favors longs. And I don't say that very often, because often we don't have that type of situation. Right. So this is an unusual situation, certainly a good time to be paying attention, and even if you want to do a small investment, a small bite, right? And because these are good prices, even if this thing bounces back up to like the mid 80s, that's very within reason. You're looking at 10,000 points. Where are we right now? 78.9, right? We were at 77.3 just a few minutes, well, like an hour ago. And we're at 78. So we're basically at 79, right? This thing has rallied like 1,500 points or something like that in like an hour. So it can do 85. That's nothing. In fact, today's open was 80. And this thing was fooling around 84 yesterday, or 86, right? Yesterday or Saturday. So those are very reasonable numbers to be looking for. And that's a pretty big move from here. So my point is, these are low risk levels, especially for swing trades, especially. It's just, if you're going to take these type of trades, make sure that you use a stop below that low or something like that. Okay. Or you could use a Trade Scanner Pro and define your risk that way. All right. So any questions about that? Very interesting times here. Let me see what the chat is saying. All right. So, hey, Monica, how are you? Long time no see. Why does Bitcoin correlate with the market? I thought it was slow, because that's a good question. I don't know why. All I know is that it is. And that's all I care about. Right? Yeah, sure. Like theory-wise, it's supposed to be anti-inflationary and blah, blah, blah. But if you think about it, the market is also supposed to be anti-inflationary. When the market's making new highs and new highs, that's usually because the dollar is losing its value. Right? So Bitcoin and the market have that in common. All assets typically rise when the dollar loses its value. So you can say the stock market is also anti-inflationary. But the point is, everything tends to move together, right? Because everyone's following the same information. I don't know. But it's the herd mentality, and maybe it's also because of the tech stocks. Think about it. MSTR, Google. I mean, think about it. All the tech stocks that are involved in the chips that Bitcoin needs to be generated. So there's kind of a relationship there. Do you think the rich are accumulating and we're in that phase? Well, I don't know. I can't really answer a question like that because I don't know. But usually they start for them. Remember, they have very deep pockets. I suspect that all these big names that you hear about, Michael Saylor and those twin brothers and all those other rich guys that bought, I suspect that there was a lot of selling, right, in these areas. And remember, it's a small community. They probably collude because you can. There's no rules against that in this market. You can call your rich friend, what's his name? Brian Armstrong can call his friends, and there's no regulatory, although they're SEC regulated now, right? Coinbase. But all these other big guys, they can do things. They can talk. They can share information. And I suspect that a lot of the hype that was coming out from December till like February was just to excite us, the retail, into thinking we're all going to be rich. We're all going to have Ferraris and blah, blah, blah. Bitcoin's going to 1.2 million. Everyone's piling in. Everyone's buying XRP. Everyone's buying Doge. Everyone's buying all these altcoins. And then this is what happens. Okay? You have to do the opposite of that. I'm the only one that warns people. I have not seen anyone else. Everyone else rides along with the trend. Ooh, these are the next 10 coins. They're going to 10x by tomorrow and blah, 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 right? That's all you see. And then all you watch now is this thing getting more and more depressed. People getting margined out. People watching their money melt away. This is the time you should be looking, right? So never mind what the rich people are doing. This is why, don't get caught up in that. focus on the market itself, because the market is really the truth of everything, right? The market tells us reality, not people, not social, not TikTok, not Twitter. That's all nonsense. You have to learn to just get the information from the market and trust the market, because it doesn't lie, right? And that's why I work with the levels very closely. In situations like this is really where you want to pay most attention to these bigger picture levels, because there's a lot of potential now, okay? And again, this area, as ugly as it looks, is potentially the range low. If this turns out to be the range low, these are going to be some great looking prices in a couple of months, right? Because we'll be back up here, or at least in the middle of the range, in the mid 90s. And you'll be, I could have bought this thing at 78K. Now I don't know what to do now. Let me ask Mark, what should I do? Should I buy it now at 95? You know what I'll say. Okay. So, but there's always risk. And so in these situations, right? And again, I'm not making fun of you. I'm not making fun of anyone. But in these situations, you have to look at the situation and say, okay, these are lower risk prices than we have seen in quite some time, but there's still risk. There's never going to be the safe price. We know that. So it becomes a matter of your relationship with risk. How much risk are you willing to take? The more risk you're willing to take, if you're right, you're going to make more money. If you're not willing to take as much risk and it works, you're going to make less money. You have to decide that for yourself. The more money you have, like if you have, $500,000, which I'm sure if you had that, you probably wouldn't be listening to me. But if you had that kind of money, you would be very flexible, and you can take you can accumulate a larger position, and you have deeper pockets. You're more flexible. If it goes to 50K, I'm minus like whatever 50K. I'll buy a little bit more, while they're drinking and whatever. And they can take that kind of pain. It's about how much pain you can take, right? The more pain you can take, the more money you will make. But you have to know your limits, because the market can do ridiculous things and you can get wiped out. So you have to be responsible with that part, right? And there's no formula. I can't tell you how much pain you should be able to take. Only you can decide that. But the people that can take more pain are the ones who win. Just remember that. All right. Now, so I covered a lot of stuff here. Let me see. I got to say another question. See, again, slow. Should have booked, right? Should have is the key phrase. And I talked about that a week ago when Hussein came in here, and he mentioned when I said, what is this all about? He goes, interesting news. And what news? And he said, this reserve, this Bitcoin reserve nonsense. And by the time he told me this, we were looking at this red candle. And I said, man, if that's how the market's reacting to that news, the party's over. So usually what happened, what this basically, the tell there was, retail is done. Retail is not, they just sucked them in and someone dumped on them. That's what that means. No one is really buying. That's what that means, right? And look where we are now. So that's why you can't make decisions on news like that, because that was a complete fake out. And anyone, look at this Bitcoin reserve, it's time to invest. If that's what you're using to invest, you get what you pay for. Remember that. All right, Monica says, there is an argument that USD is losing its value to the yen. Too many news-driven moves. Yes. So, well, that could be, look, I mean, we can look at the dollar index. The bonds are also a big part of this. Let's see. This is the dollar index. Man, the dollar index got hammered. Okay, look at this. So this may maybe have something to do with it, right? This is the dollar index. Well, interest rates should be, let's take a look at the bonds real quick. All right, ZN1. So bond prices are rising, which means rates are going lower, interestingly enough, right? That's what that means. Rates are going lower, which that means the dollar should be weakening. Yet the stock market is having serious problems while rates are going lower. That's unusual. Lowering rates should be good for things, but they may be taking it as, well, the economy is a lot more weaker than we thought. So these lowering rates will eventually find their way back into the market. That's in lowering interest rates means money gets cheaper, people can borrow more money, right? And that's part of the business cycle. So that's interesting to see. All right, let's just take a quick look at the Qs or the NASDAQ. Well, we go to QQQ. Let's see what's happening over here. Look at this move. I want to point something out, and then we'll go to the Trade Scanner Pro. Take a look at this. So these are the Qs, right? We were just here like 2 weeks ago or 3 weeks ago or something like that. Now look at this. When have we had a move this big? Let's measure this move real quick. From the bottom to the top. How big is this move? 70 points on the Qs, right? 70 points in a very short period of time. We have not seen a move that big since August. Let's measure that. 85 points, about 85 points, right? So these moves, this move from August, I mean, this is almost the same length. We have not seen a move this big since August, right? I mean, if we go further back, there aren't moves that, look, there aren't moves that big anywhere in such a short period of time. I mean, look at this. Look at this move over here. Look at this, right? Look, it's not even, look, it's like half. Look at that, right? This move. We have not seen a move. This is a rare move. So if this is rare, either we're in like real big trouble here and this thing is going to just keep going, or this thing's going to bounce because it's an unusual move. Now, I know the economic environment obviously is not the same as it was back in August, but I don't look at that. I look at the probabilities based on the levels. I mean, and just look where we are. We're all the way back to, let's see, we haven't been to these prices here since, like, this goes back to around that time. Okay. Do you think the chances of a bounce are high or low at such levels? What do you guys think? I mean, once we broke this level here, the party was over. Like this was a major break over here. And we've just collapsed since then. Without, there's been no bounce really. Like, I mean, look at the candles. We've had some bounce attempts. Like we had this green one over here. And we had this pin bar situation. This was Friday over here. When I saw that pin bar on Friday, I'm like, oh, that should be the bottom. That's what I thought. Okay, look at this pin bar. And look where we are now. We never even made it above that pin bar. All right, that was Friday's high right there. Never even touched it. And look where we are now, new lows. So the point is, do you think it's just going to keep going like this without some type of retracement? I mean, it can, but the question is, what's the probability? I think the probability is greater that we at least attempt, maybe not get back to the middle. Like, who knows if we get back to the middle? This is what? 509, I think. That's a long ways from here. But at least, I mean, I think there's a higher probability at least we can retest these levels. That's one candle. You know, I mean, what do you guys think? Would love to make some longs, but not wanting to step in front of it. See, Sean? Maybe Sean's saying that on purpose because, you know, we always talk about how when things look their worst, you're like, oh, I'm going to step aside here. This is when you have to have the courage to step in, you know. But so Sean, I mean, if you're serious, you just don't have the courage to do it or whatever. You just don't want to step in front of it. Step in small, you know, buy small, buy a position, you know, 15 Qs, for example, right? 15 shares. If this thing sells off another 10 or 15 points, which would be a lot, especially considering how far this thing has pulled back, how much money are you going to lose on 10 or 15 shares? Not much. You know, so this is really like, if you're timid or you're like, oh, I don't know, small bites, if anything, it'll turn into something. Just don't feel bad if this thing rallies hard and I should have bought more. Right? Don't feel bad if it does this. This is where people, for some reason, up here, this is where people feel very confident. And this is where I don't feel confident. Up here, I'm like, I don't know. I don't know about these prices, small bites. That's usually when I say that. In this situation, I say the opposite. If you're going to take bites, you don't have to take big bites, but bigger than small bites. So if a small bite for you is 10 shares, maybe you buy 20 shares, but you don't have to buy them all at the same price. Buy 5 shares at a time, but your goal is to buy a bigger bite. Does that make sense? That's when I see stuff like this, the Qs, the SPYs, Bitcoin, they're all the same, pretty much. They're all behaving in a similar fashion here. Also, another thing I want to point out, I know we have to talk about trades. We have a little time. Another thing I want to point out is the volume. This period of time, you know how I always talk about in August, the seasonal volume, second, third week of August is the lowest volume and the worst time really to trade? Well, we're now at the opposite of that. This is probably where volume peaks. March, April is when volume peaks. So moves are going to be the most exaggerated at this time. So this is a good time. March, April is typically a good time for trend following strategies. I mean, if you look at these candles, right, on the smaller time frames, because I look at these, I mean, every breakout trade works. Every short on a 5-minute time frame works. Every single one works. You're like, wow, that was easy. But that's not normal, okay? It's the environment, and volume is also the greatest. So whenever you have the greatest volume, you're going to have the greatest momentum. And on top of that, we have a lot of drama happening in world economic stuff. So that just exaggerates it even further. But just keep in mind, it's the presence of the volume that we're seeing all this action. Years, like over the previous few years, we haven't seen a March like this. Usually March tends to be somewhat on the bearish side, cycle-wise. But we haven't seen this because we've been dealing with such a fake market for such a long time. And, so now reality is setting in a bit. But even with that said, we're at a major low. Maybe we go lower, but I anticipate a bounce. Maybe CPI is the catalyst. I don't know. All right. But I look at the level and I evaluate the probability of the level. What are the chances we go a lot lower versus some type of retracement? Okay. Even if it's like a quarter of the way, some type of retracement. So if you're going to short this thing, or if you're looking to go short, this would not be the time. The time would be here. Something like that. That would be the ideal place to do it. Not now on the swing trade time frame. Make sense? All right. So let me know if you guys have questions. Let's now shift gears and let's go to Bitcoin. Now I have some good news about the Bitcoin real money situation that I've been talking about for a while. Let me go to MEXC. I have to go to Bitcoin Perp. So I got an email from MEXC actually, because they always send me these solicitations. It's always some guy who claims that he works for MEXC, and he's not. He's just an affiliate looking for sub-affiliates. So he sends me this email, and it says, MEXC, we have this deal, blah, 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 blah. No KYC. That's new. No KYC, because when I checked MEXC like a couple of months ago, KYC was required. So maybe I guess with all this lax regulation, maybe they're like, F you, World Economic Forum, we're going to do what we want to do now. Since all these other crooks are allowed to do what they want to do, we're going to let people trade on MEXC. Of course, if you're from the US, you have to use a VPN because they still follow that rule, but you can use a VPN. KYC is not required to trade on MEXC. So right away, I pulled up Stian's affiliate link and I opened an account. Right. So now I've been experimenting because I like MEXC. They're decent. They're at least somewhat more legitimate, better choice than WeX, that's for sure. So I put a little bit of money into the MEXC account and I'm just testing it out. But most likely that's what I'm going to go with. And we have the affiliate set up and it's Stian's link. So, I plan to be looking for these day trades on here with real money on the MEXC account. And I just put in like $100, a little over $100 of real money. I can't really do anything with that. I just wanted to test it. But I'll put in some more money. I probably will go up maybe up to 500, not 1,000, just up to 500, and then see if we can trade that on the real account. That's the plan so far. Okay, but MEXC is definitely the choice, and we have an affiliate link. It's not in the description right now because Stian wanted me to remove it because no one ever signed up for it. But now we can use that. All right. So anyway, so if you're interested in MEXC, just wait, or if you want the affiliate link, I'll put it in here now. And it's Stian's affiliate link. So he gets a cut if you trade. All right, just wanted to mention that. But that's good news because otherwise, I was struggling with these decentralized exchanges. They all suck. They're just, there's one inconvenience after another. And most of these centralized exchanges don't let US customers open accounts because KYC is required. But MEXC changed that. All right, anyway, just wanted to mention. Now, so if you want to know how the Trade Scanner Pro works, there's a link in the description to a tutorial. You can watch that. I'm not going to explain it here. Hey, Amir, tell us about the BTC plan for these days. Okay, Amir, I talked about that at the beginning, so I'm not going to talk about that again. Just rewind the stream, watch the beginning. I talked about that the whole time. I talked about it a little too much actually because I have to get out of here soon. So we're going to talk about trades right now in the Trade Scanner Pro. So first thing I'm going to do is I'm going to switch these charts. I'm going to make this a 1-minute chart. Okay. And so I have a 1 hour and 1 minute because I'm looking for day trades. All right. I'm going to pull up my order book here. All right. On the practice account, because this is still a practice account. And what we're going to do now is we're going to gather our information for our trade idea. Right. So you guys know how I do this. This is pretty easy. So we're only looking at trend and levels. All right. Well, we know what the trend, we know that it's bearish. No, I don't have to, no analysis required there. But the levels, that's a support. Okay. And that's a resistance. That's it. That's pretty much it. Right. That's all we need. I don't need to go any lower than that. I mean, we can look inside here and we can say there's some minor levels inside there. Like we can do that. That may be good for profit objective, or if we want to let something run. But the thing is, this is a support level. This area is a support level. So this is tricky because do I look for longs or shorts here? We're a little bit off the level. See that? We're not exactly on it. We're a little bit off. So the momentum is bearish. So this is going to be a tough choice here. I can do two things. I can wait till we go back to this blue line, which is I just drew from the hourly chart, and I can look for longs there. Okay, I turn the Trade Scanner Pro on. I turn it into a counter trend mode at this area right here, and look for longs. I can do that. Now, in trend mode, this thing says the trend is bullish on the 1 minute chart. So I can also go with that because we're coming off of this support. Because if I want to go short now, I have to switch to counter trend mode, right? If I go into my control panel over here, I'm not in counter trend mode. By the way, if you get the Trade Scanner Pro, you have to turn these on. Make sure you turn these on. And by the way, Stian has the instructions for the update. So he's working on it again. Stian has been, he got this new job and he's been extremely busy over this first quarter, but he's now got some free time again and he's going to be able to help us out. So I'm excited about that update when we get it. So he's still working on that, just to let you know. So as far as this trade idea goes, what do we do here? So I'm going to go with the momentum because the momentum says the trend is bullish, right? I'm not going to switch to counter trend mode. We don't have to. This thing made the move to justify longs. Hey, Alex from Romania. I heard the Tates had to go back to, they got kicked out of Florida. They had to go back to Romania. So you can go spend time with them again. All right. So much. Yeah. Yeah. Alex. See, Alex knows. See that? Buying opportunity. See that? See that, Sean? Alex knows. Now is the time to at least take something. Yeah, there's some risk, but think about it like this. You're definitely not buying the top. That's for sure. Okay. So, yeah. All right. So I want to go long this thing. I'm going to work on the long side. It may be some time. I don't have a heads up here. I don't have anything. Yeah. So, hey, Sean, here's an idea for you. To make those calls cheaper, sell a call against it, right? So those are called vertical spreads. It's like a covered call. So I don't know, let's just say the Qs. Let's just say you're interested in the Qs, right? I'm just going to use Qs as an example. You can buy like the 480 call and you buy like 45 days out or something like that. You need some time on these, right? So you buy like a 45-day bull call spread, 480 is your long, right? And then you sell a 485 or you sell like a 490. Actually, a 485 is better because a 485 is going to be more money and it's going to reduce the cost of that 480 call. So basically, it's like you're paying half for it. So instead of $5 for the call, you're paying $250. And you have basically a $250 profit or $250 potential profit that you can make. It caps your upside, but it reduces the cost. Okay, so I love vertical spreads. Those are my favorite type of spreads, especially in environments like this, because yes, it's long premium, but because long premium is frowned upon, especially because they melt so quickly. But hey, I look at this. It's like buying a long call, just cheaper. You're getting a coupon on your long call. So you don't if you're wrong, you lose half of that call value. But if you're right, you're basically going to make, if you're buying it at 250, the most you can make is 250. All right, but whatever. The thing is, you can take pain on it, right? Options are a great choice for this type of environment. So if the market just continues to collapse, you're limited to your whatever you paid. So if you paid 250, that's the most you can lose. If you're right on this thing and that thing runs 5 points and it runs beyond your short call, you make your 250. Right? But usually you don't even let them go that far. Like if you buy something for 250 and it's up like $100 or you just take the money. Because the problem is, I noticed if it's like a 45-day call, for example, a 45-day spread, and you're still early and this thing goes through both of your prices, right? And you're early and you still have like, 30 days left, you don't realize that full profit, even though this thing is 10 points higher than your highest call. You would think, oh, I should be able to get my 5 points. No, it's because of the time value, right? Because that short call still has too much time value or whatever in it. So it kind of limits you in that area. But it's great for so what do? You just buy more of them, right? Anyway, I'm not here to teach options, but options are a great way to play this game. Man, I only have 15 people watching. Man, no point in promoting the Trade Scanner Pro because all 15 of you either have it or know about it. All right. So anyway, let's see what we have here. So I would like to see a long signal is what I'd like to see. There's nothing here. So usually in these situations, you go into counter trend mode looking for the reversal, right? Or you wait until the momentum changes, right? Which is what we have here. This momentum has changed on the hourly, on the 1 minute time frame, right? This is a 1 minute time frame. So what I'd like to see is some sort of pullback and a signal to go long. We don't have anything. I don't even have a heads up. These red columns are heads up. If I had a long coming, I'd see a green column. I don't even have that. So I can wait, which is the best thing to do. And you could set a notification on TradingView, which is a great thing. You just do this, okay? And then you change this over here. You change this to the Trade Scanner Pro. Where is it? Trade Scanner Pro right there. And then it'll tell you when a heads up appears. It'll tell you when a new trade appears. That's the best thing to do, so you don't have to wait in front of a computer. Now, the other thing to do would be to go to a smaller time frame, right? Which I really don't like to do. By the way, when I do this with real money, I'm probably only going to stick to one time frame or like a limit, like 1 minute, 30 seconds, and that's it, no lower than that. Oh, look, a trade. Is that right? Oh, this trade is old. This is the 30-second time frame. I know it's old because, look, it started back here. This is interesting. So maybe I'll work with this on the 30-second. So because we're back at the buy price, but the candle looks ugly. So maybe if I get some sort of green candle off of this line, I'll do something. Right? And this is, I'm showing this because you can employ what I'm doing here. Right? You have to practice with it, paper trade with it. If this turns here, I'm going to buy it. I'll buy one. I think I can. I can't afford that many with this account. I only have this is $1,000 account, practice account. And they actually apply margin requirements to this thing. So I don't even think I could buy one, but I'm going to try. Okay. So let's see if I get a green candle. This is 30 seconds and it may stop out. Look at the trailing stop, which is advanced, right? That's the trailing stop. It's cut the risk somewhat, almost in half. I'm not in the trade. I'm just watching it. Okay. If it stops out, no problem. I'm not in it. I'll wait for the next one. That looks like it's going to stop out. But I'm not going to go to a 15-second. I'm just not going to do it because I'm just asking for trouble, especially in this environment. All right. This is actually good that we're pulling back here because we're getting closer to the support level again. Right. So it stopped out. No problem. This is why you wait. Right. I waited. I was prepared to jump in, but I stood aside. I said, let's see if we get a green candle at least. At least. So I get these heads up. Look, I got 2 heads up. I'm getting these orange candles. That's a warning that basically tells me that a new signal is likely to appear soon. This is also a mini double bottom situation on the 1 minute. It doesn't mean a whole lot, but it's something. You know, it's nice to see. And look, it's also relative to this back here. Okay, so there's some kind of something over here. I'll take one. I'll buy one contract if I get the signal. The heads up lets me know that a signal is likely to appear in the next 3 to 5 candles. Sean has a question. You got to spruce up the background. So Sean, no, you know what? You wear costumes. Yeah. No, there's a signal. Okay. No, so actually I've been working on this, Sean. So thank you for mentioning that. I'm working on this. This background is, I'm actually going to do a green screen because I thought about this. There's no point in really sprucing up my background when we're really not I'm not doing a vlog where I'm talking about my feelings or I'm talking about dating advice, right? If I was doing that, then I'd have to spruce up the background because then it'd be boring just to watch me. We're here for the chart. So I'm gonna have some. I have this new streaming software that I'm developing. I'm not developing it. I'm putting together the logistics of it, setting up the layouts and stuff like that. It's a million times better than this streaming platform. So in the next couple of weeks, I'm going to be transferring to that, and you guys will see. I mean, I'm excited. I'm usually not excited about streaming platforms, but I'm excited about this. I love this streaming platform. Okay, the new one that I'm going to be working with, it's just 10 million times better. So this whole look is going to improve dramatically. I can do really cool things too. I can put frames around the chart that make the chart go on fire, and I can do all kinds of wild things with that software. It's really amazing, and I can do it as I'm talking. So, yeah, so that's coming. So I appreciate the feedback there, Sean. But yeah, I spend a lot of time behind the scenes trying to figure out how to improve things. And I'm slow, and I definitely apologize for being slow. But I trade, and that's not easy. That consumes a lot of my time. I have other things that I have to deal with. So, and it's just me. Steen has been busy, so progress is slow. But I have to do research. I have to find the platforms. I mean, I've been researching a lot of stuff. I have to watch a lot of YouTube stuff. I don't have to bore you with the details. The point is, the improvements are coming because I'm working on it. Okay. So anyway, personally, the stream. No, I appreciate that, Sean. But you know what? I try to put a lot of value into the stream, at least good content to listen to. But there's a lot to be said for the way the stream looks and the way the stream sounds and the interactivity and and I watch people that have 5,000 people watching. Okay. So, and I take notes about what they're doing and what I'm not doing. And so it's led to a lot of inspiration and a lot of ideas for improvement. So it'll be coming. You guys will see. And I'm happy with the idea. I like the way I've run some tests. I like the way it looks. And I'm excited about that. So in the next couple of weeks, you'll see that. Okay. Yeah. And maybe I'll have more than 10 people watching me. I can't believe there's only 10 people watching me. I usually do better than that. I guess the title really stinks today. I guess no one cares about Bitcoin to 73K. Maybe I should have put Bitcoin to 1.2 million. Maybe I should have put that, and maybe I'd get some more followers. Or maybe YouTube just doesn't like me today. I don't know what it is. Man. All right, you guys. So I'm going to give this trade a little time here. And if it doesn't really go anywhere, I'll just take what I can and I'm going to bang it out. But you guys got the idea, right? And if anyone new is watching, if you want to subscribe to the Trade Scanner Pro, there's a link in the description. I'll just show you the page here real quick. It takes you to this page. I'm not going to spend a lot of time on this. You just scroll here to the bottom, right? And you can subscribe here. Just make sure you put your TradingView username in there properly, and then you'll get your invite. But otherwise, that's all I'm going to show. All right. And it does help if you have a little experience. Now, I stream every week where I show these type of trades. Man, this one isn't working. I show these type of trades, and I show you how I come up with the trade idea. And then we see if it works or if it doesn't work, right? This one isn't working. But we've seen plenty of examples that work. And this is not, again, this is not a good time to trade because the stock market is closed. And speaking of the stock market closing, let's just quickly take a look how it closed. This is the Qs. We ran up to 470. That's 475. So we closed at where? 473.10. Well, where's the close? This is the close. No, this is the close right here. So 1600 is the close. So we closed basically around this price. Wow, 470, 473. So on the daily, this thing closed minus 17 points. I mean, man, that is just wild. Okay, back to Bitcoin. Let's go back to our 1 minute. And let's open up the chart. Oh, my trade is gone. Oh, my trade is gone because I guess I changed the chart. Oh, no, because it's a 30-second chart. I'm sorry. This is the trade right here. All right. So it's kind of just fluctuating around break even. All right, so I'll give this a couple of minutes. What time is it there? Yeah, I'll give it a few minutes, and then we'll just be done with it, because I see people just don't have time for me today anyway. Now, if you look at this, I mean, essentially, what are we doing here? This is a consolidation, right? It's a triangle. And if we zoom out a bit on the 1 minute, we rallied off that low. What is this? The 77, whatever, 77.3, 77.4. We rallied off that low, and we're just basically consolidating. Looks like it's going to stop out. But this still would be attractive for longs until we go back below that support, even if this stops out. So you have to be able to recognize that, right? That's a key thing. You don't want to just shift and start shorting this thing, especially near such an important low. This thing hasn't stopped out yet. And it looks like it keeps giving these warnings. It keeps giving these heads up. See that? It keeps giving them. So it's trying to find a bottom here. It's just, it's just not happening right away. Always interesting to hear your thoughts. Oh, cool. No problem, Hussein. That's I'm glad someone, I know you guys are all my regulars. At least someone likes to listen. You guys make it worth it for me. All right. So, but like I said, my stream will be improving. You're going to see much nicer looking stuff going on here. It'll be more entertaining. That's for sure. So if anything, you get some entertainment out of it. If not some knowledge. But yeah, this is a triangle. This is some sort of consolidation, which means it can squeeze higher, right? And it's a bullish consolidation rather than a bearish one. Why is it bullish? Well, look, the initial move was this move right here, and it's a higher low. That's why it's bullish, right? If the initial move was bearish and then we had something like this, then it would be more bearish. So whether this works or not, this may stop out and then it may be followed by another signal. The new signal may appear somewhere slightly below the range. It could be like a failed low within a consolidation, just on a 1 minute chart. You have to be aware of those things, right? You have to be able to spot those things so that you don't start shifting and say, oh, it's a short now, right? Because you don't want to do that at levels that are high probability longs. See, that stopped out. I got to bang out. You don't want to start shorting something that has a high probability of reversing in your face because we're sitting around this support. Okay. You want to respect the stop, but if another long shows up, I'd be willing to try that again. I'm not going to do that now because I have to go, but that's what you would do with something like this. Now, if price breaks this support, this consolidation, which is minor because it's on 1 minute, and we start pushing this, we break below this, then that might call for being open to the short side. Also, in that scenario, this will probably shift back to bearish, and you just look for bearish trades, right? Because I haven't even changed to counter trend mode. The only time I would change to counter trend mode is if we were sitting on this line and this was bearish. Then I'd switch because I want longs, right? This is a support. It's a pretty significant, it's a support on the bigger picture as well as a smaller picture. So that's a compound support. It's a pretty heavy duty support. So it may stop out a couple of times, but when the move comes, it's probably going to be a big move. At least, big move, 1,000 points. That's pretty reasonable nowadays on a 1 minute time frame. All right, you guys. So I'm going to leave you with that. If you have any questions, you know where to find me. There's you can email me. I'm not going to take the signal. We can watch it, but I'm not going to take it because I gotta. If I sit here, this signal will keep me in for another half hour. But keep an eye on it. So yeah, mark@markpremarkets.com. You can email me. You can send me messages on TradingView. That's cool too. And that's that. If you get any messages from me or from Steen or from Alex unsolicited asking you for money, it's a scam. Report that person. Make sure that person gets banned or whatever. Let other people know because that happens at times. See what I mean about this long? See what I mean? All right, you guys. So I hope you found this helpful. All right, cool. Yeah, I'm just reading. Okay, I'm just looking around. All right, so people, enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.